Hello, I'm Douglas Brodie, co-manager of the Edinburgh Worldwide Investment Trust, EWIT. Today, I'm going to touch on recent performance and update you on our thinking regarding the prospects and positioning of the portfolio. EWIT strives to understand how the world is evolving and which companies are best positioned to both drive and benefit from that evolution. And against that long-term forward-looking remit, we are pleased to report that over 2025, EWIT's portfolio delivered strong investment returns. The trust's net asset value comfortably outstripped the benchmark, while the share price returns were broadly in line. Throughout the year, markets remained volatile, with geopolitical developments or monetary policy projections driving wild swings in sentiment. Yet the materialization and onward visibility of technology-led structural growth, whether in AI, industrialization, or groundbreaking healthcare, prompted investors to re-evaluate many of our holdings. Pleasingly, several of our larger holdings have made outsized positive contribution to the trust's strong returns. For example, Alnylam, the clinical biotech, grew revenues by more than 80% to nearly $3 billion, powered by its portfolio of medicines, especially its new drug called Amvuttra for age-related cardiomyopathy. A formal review of the position in September reasserted our excitement about this special business and our conviction in the potential for further upside as their pipeline evolves. Similarly, SpaceX, the space launch and satellite company, continued its remarkable progress. Its Starlink service now has over 9 million subscribers and is continuing its path to become the world's first global utility. Its acquisition of additional radio frequencies from EchoStar opens up the possibility of satellite-based, high-bandwidth data services direct to mobile devices, hinting at further optionality in their commercial path. One of the most pleasing things in 2025 has been the elevation in the portfolio's competition for capital. This was supported by the successful implementation of meaningful process changes introduced 12 months ago in collaboration with the board. These have helped us be more disciplined with names that haven't been delivering relative to our expectations, demonstrated by the decisions to sell out of companies like Blackline and Digimark. Alongside this, we've seen a tick up in M&A activity, with holdings like CyberArk, Exact Sciences, and Confluent being acquired by trade buyers. But a more positive driver of portfolio evolution has been the rich flow of new investment ideas generated by the team. Over the year, we've taken initial positions in over 20 new companies, and these span a range of opportunities from traditional areas rich in opportunity like automation and biotech, through to much more idiosyncratic opportunities in uranium enrichment and autonomous flying taxis. As a result of this trading, two increasingly significant areas within the portfolio are our exposure to meet the current need for national security and data center infrastructure serving the AI boom. For example, we've taken initial positions in Kratos Defense, which designs and manufactures solid fuel rocket boosters, small turbofan engines, and relatively low-cost long-range drones. And Exail, which manufactures advanced precise positioning technology for devices like satellites and underwater drones that can't access conventional GPS. These join existing holdings like AeroVironment and SpaceX in providing exposure to the advances in defense technology. Over the last few years, we've recognized the potential of generative artificial intelligence, but frankly, it's taken time to access these opportunities within our market cap range. Recently, however, we've uncovered several companies driving the boom in AI data centers. Companies like Iron, which builds data centers capitalizing on its valuable connection to the electrical grid, or Astera Labs, which provides critical components to improve the GPU efficiency within server racks. Opportunities like this have resulted in the portfolio having a differentiated exposure to this groundbreaking technology, which is at odds with the high levels of concentration and valuation of large cap indices. The portfolio has exposure to the most exciting areas of technology-enabled structural growth, from the earlier mentioned security and AI themes to physical and digital automation and groundbreaking medicines. From our work, we perceive the pace of change in these areas to be accelerating, providing ample opportunity for our approach. And while we recognise that markets continue their unpredictable path, we take confidence from the portfolio's operational strength that is growing at a much faster rate than the market and is forecast to continue doing so with improving profitability. This, combined with valuations that look undemanding relative to other fast-growing market areas, will provide the foundations for future outperformance. So thank you, as always, for your continued support, and especially for those that took time to vote in the recent general meeting. For more details on the Trust, we invite you to read its latest annual report available on our website, and we look forward to seeing many of you at the next AGM.